Welcome to Chit Chat Stocks. This is our weekly Power Hour episode. I'm one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. We've got a lot of news this week, including potentially a major computing breakthrough from one of the world's largest big tech companies, and one that was perceived to be a laggard in AI for quite a while. So a little bit of a counter narrative there. But we've got some other stuff to get to as well. I've got an interesting small cap of the week, not kind of the traditional one I typically do. And then, Brett, any big topics for you this week?
Yeah, not much news out there from an earnings or investing perspective, just on stocks and stuff. I had some more info, I guess, to spoil what your company is. Google announced some more products in the AI space. Stock went to all-time highs. I had some interesting discussions that I found on Twitter regarding portfolio management, idea generation, stuff like that. And then some fun stuff from Eh, yeah, just some maybe less informational or educational stuff and some more entertaining and nonsensical stuff we found in the investing world this week.
All right. And before we get to that, we do want to talk about our friends at Public. Heads up, folks, interest rates are falling, but you can lock in a 6% or higher yield with a bond account at public.com. It's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks. All right, Brett, where do we want to kick things off?
I don't know. It's kind of I wouldn't call it a down week, but this is one of the lull periods, especially as we get into the holiday and end of the end of the year. Uh, yeah.
There is
Do we
some,
want to talk
yeah,
about
it's
Project Willow, quantum
Project.
computing? Something that we're quite in depth on. I can't tell whether these new releases are just something that's not going to be anything close to commercialized like within the next 15 years, or if this is the next breakthrough in all of computing. It's kind of hard to tell.
Yeah, there was, I read a couple follow-up interviews with the guy that's like, I think his title is Chief Optimist of the Google quantum computing division. So it's basically he kind of runs it. And Google put out this press release this week. First of all, I did not realize Sundar Pichai was on Twitter until this week. Apparently, he has a Twitter account.
5 million followers, Ryan. Get with
I know.
the club. Join the club here.
I guess I haven't been paying attention, but basically, it's kind of this Google blog post announcing this sort of big breakthrough. So here's the tweet from Sundar Pichai, the CEO of Alphabet. He says, introducing Willow, our new state of the art quantum computing chip with a breakthrough that can reduce errors exponentially as we scale up using more qubits. I think I'm pronouncing that right. Qubits, maybe. Qubits. Cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in less than 5 minutes that would take a leading supercomputer over 10 septillion years. Yes, that's a real word. 10 septillion years is longer than the age of the universe. So basically, it's a huge breakthrough in quantum computing. There is, I read this follow up interview. Basically, that chief optimist guy that I was talking about said there's not really going to be any commercial applications, or it's unlikely to solve any commercial applications for before the end of the decade, is what he said. So
So probably three. That's the cheap optimist. I doubt that. You know what I mean? The cheap
yeah,
optimist guys that are saying, "Well, we're going to Mars in a couple of years, or we're gonna have full self drive." We're gonna have self-driving solve. Everyone was saying that back in 2017. It might take a couple of years, but I'm the optimistic one. You should probably multiply that by three.
yeah, and it's uh interesting because Google stock jumped like 5% on this, which it's unlikely to have any real revenue contribution, if ever, for at least quite a while. But if anything, this breakthrough will probably just mean more investment for the foreseeable future, which probably will hurt earnings, if anything. But maybe long
Maybe. I mean,
term,
they're already doing this. But
I know. But usually, you hit these milestones, and it just encourages kind of that next level up of investment, or at least reduces the chances of them scrapping it. But here's kind of this crazy part at the end of the article. It says, and it kind of mentions this in passing, and I don't know really what to think of this, but it got a lot of attention in the news. It said Willow's performance on this benchmark is astonishing. It performed a computation in under 5 minutes that would take one of today's fastest supercomputers 10 septillion years. It lends credence to the notion that quantum computation occurs in many parallel universes, in line with the idea that we live in a multiverse, a prediction first made by David Deutsch. So,
yeah.
caught a lot of news. Any headlines there? What's the what? How are you adjusting your portfolio to account for the multiverse?
Yeah, right. I guess the I think they're pretty much joking around that, but it does fit up with some of the theories that would line up with. I don't know. I'm obviously no expert on quantum computing, but essentially the way they think about it is if it's able to solve all these things simultaneously and it can be zero, one, or anything in between uh, at any one moment. So it's not, zero or one, it's every single instance. That could be proof that there is an infinite amount of universes out there where we're all going through, kind of Oppenheimer movie stuff, all those crazy scientific stuff. But with
And in
the
all those
actual,
universes, I am underperforming the market.
yeah, exactly, exactly. People were joking, there's blue links in all the multiverses, blah, 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 blah. All roads lead to Google. But I will say, from a commercial standpoint, what I thought was interesting is this breakthrough, and obviously it's not there yet. People think that given the high, computation intensity and stuff like that, that it's able to perform, that this could not only break, but it could allow someone that solves this first, maybe Alphabet, to mine the rest of the Bitcoin that's going to come online. That could be worth, at least as the time right now, about $100 billion. And it potentially, I don't know how, but I think it's because of, you know, like the level of cryptography within the Bitcoin and stuff like that, that a computer such as this, a quantum computer, could break, you know, some of the security around there. And there's actually a huge, I don't know if it's a panic, but it's probably just because you're reading the stuff online. It seems like a panic. There is a lot of discussion about prepping for crypto in a post quantum world because it could break the entire, uh, you know, reason for the industry.
It's a little disheartening to think that we've had this massive breakthrough, and the first thought for everyone is how much crypto can this mine? How much
That's
Bitcoin
true.
can we mine
Yeah.
with this?
Yeah. I
Um,
think, and maybe even getting more serious on Alphabet, this could, I think the reason the stock's up today is that people might be realizing that the company is still on the cutting edge of all sorts of computing technology. But when it comes to building their moat, widening their moat, making sure they're on the cutting edge of being able to provide all these different AI tools to the billions of people that use their products around the world, adding any sort of efficiencies to the cloud infrastructure that they've built and trying to extend that lead is going to be helpful for them in expanding that mode and economies of scale. Where we look at some of the AI startups, they have to spend so much, they have to outsource all this. So if quantum computing, helps with that, hey, uh, that could, you know, make computing costs lower for the cloud customers and
yeah,
themselves.
yeah, and we're going to talk about another, I guess, instance here of Google kind of being on the leading edge, and it never seems like they're on the leading edge until you start to get departures from competitors, and we saw that with a certain self-driving competitor. We also got a question from John here, or I guess more of a comment. He asks about my moving boxes. For those that listen to this on the podcast, I'm recording this in a not my typical place. I am moving. Ultimately, these are not moving boxes, but yeah, it kind of looks like the North Pole back here. Um, yeah, for anyone watching on YouTube, I'll just say that once so that we don't end up getting too many questions about it. But yeah, he also mentions my tobacco basket has done great this year. Altria, British American Tobacco, and Turning Point brands. Um,
Yeah, how's
a little bit of a
TPB doing? Turning Point Brands. I haven't looked at that one in a long time.
no, a little bit of a teaser here.
Well,
We may be doing a little bit of research then on one of those in the not too distant future. So keep an eye out for that. But yeah, John, I don't see Philip Morris in there, but it's the one you're missing, which I apparently have to shout out every single podcast episode because
yeah,
that's
that's Ryan's new favorite company. Look at Turning
yeah.
Point Brands here, though. Not bad performance. Stock was below $20 a share, just slightly below in basically Halloween of last year, and today it's at 64. So multi-bagger in a year. I wonder what
Wow,
happened.
have not followed that one as closely, but okay, I want to mention this real quick. General Motors, GM, is shutting down their self-driving division. Actually, not the self-driving division, but any attempts at having a robotaxi fleet. I think they're still going to invest in some of the self-driving technology, but really only for personal automobiles, not like a robotaxi fleet. And you look at FinChat, our sponsor, one of our sponsors here, breaks out the Cruise division. So, for context, General Motors acquired Cruise, which is one of the self-driving companies, one of the leaders in self-driving, or it seemed that way for a while. And they have, I think they've owned them for like 5 years now, maybe. And the Cruise division has burned, I believe, $7.5 billion over the last 4 years. That's the Cruise EBIT. So they've lost $7.5 billion. You kind of wish, and there's this quote from, they had an event basically to announce that they called it a status update, which is a nice way of saying that we're killing this division. It
Yeah,
says,
the sneaky like no like anticlimactic press release, and it's one of the most important things. What do they go? When the like a CFO gets fired or something like that, they just try to sneak it under the rug with some press release, like company update. We are changing our full year guidance, and oh, also by the way, one of our most important executives
we're
decided
we're
to resign.
we're narrowing our range.
Yeah.
And also our executives are quitting. But so in this status update, which is just hilarious corporate speak, it kind of reminds me of the uh, workforce restructuring speak, where
Oh, right.
it's a
Yeah,
nice word for
exactly.
layoffs.
Right sizing our workforce. Right sizing is my favorite word. That's got to be a McKinsey word right there. Don't say
Yeah.
you're firing them. You're right sizing your workforce.
Yeah. So the CEO said, when we looked at the amount of money to deploy a robotaxi business and then to maintain that business and grow it, it's quite a bit of capital. And as you know, a robotaxi business is not General Motors' core business. I feel like you could have probably figured this out a while ago, that it's going to be expensive to run. And uh, like, there's no way that's like a new revelation.
Yeah.
But anyways, it says none of these options seem to serve the best interest of the business and our shareholders, mainly because launching and operating a robotaxi is expected to require a significant amount of incremental time and capital beyond the $10 billion we have already invested. So I guess that's a win for Waymo potentially. And it
Or
seems like we're
or, uh, or a loss because they're saying that it's wildly expensive to run.
yeah,
But
but
on
on the
the
flip
yeah.
side, you could say they've they're a lot further along. Um, they have true they're already in the revenue recognition stage, so it's not as if it's just some concept. It's a true revenue generating business. Um, and it also goes to show that there really are only a few companies in the world that have the balance sheet and the cash flow machines throughout the rest of their company to be able to make big bets like this. And Google's one of them.
And the culture. I wonder what GM's balance sheet and cash flow looks like. I mean, maybe they're spending too much on buybacks or something like that, or paying too much on dividends. I don't know for sure because I know the business is doing better than people thought. I'm trying to load it up here. Maybe toss out the free cash flow. I think that's probably a proper one to use. I think what's interesting is when they say this, and this is something that I guess is just confirmed. Many people were had this as I don't know they were aware of it or this is their idea. Is that the Tesla route, their path to trying to build full self driving is much cheaper than the Waymo version, at least from upfront costs and stuff like that. Because isn't GM almost pivoting to this with Cruise? Is they're trying to make it just embedded in their vehicles?
Probably, but I'm not 100% sure. I mean,
If they shut down this
yes.
whole thing, whew, that
No,
really sell it, really sell it off.
I think they're probably going to continue investing, not to the same degree, but in the technology um, to benefit their own cars and potentially outsource it to other cars as well. Tyler asks, why not spin out Cruise? I think w- it's not as if they're totally killing the cruise business, but the ambitions of becoming a robotaxi operation have, it seems like they're getting rid of that. And so I'm sure there's some benefits to having Cruise within your company. The other part is I don't know if Cruise, one, I don't know if they're going to be able to find another buyer. And if they spun it out, I think you need a parent company with a big balance sheet at this point to be able to finance the ambitions of the Cruise team, or
Yeah,
it could just
or
be a
you
smaller
need to.
company.
I mean, the Waymo is even doing this. Alphabet doesn't even want the entire stake with them. They're raising money from outside investors. I think what's tough with Cruise is that I'm guessing investors are much more pessimistic after they shut down their testing routes, where Waymo took almost the the opposite path and has started expanding rapidly in cities across the United States. But I look at this here, and mine might be the perfect metric because I know sometimes, you know, eh, investigate what their true earnings power is. But if we look at our friends at FinChat, and I'll just go back to 2020. General Motors free cash flow, $11 billion, $7.5 billion, $6.8 billion, $10 billion, $8.3 billion. You got enough money to invest pretty heavily in Cruise.
M- Maybe it is. So, yeah, it's an interesting idea because you've got Google, who has like $100 billion plus in cash on the balance sheet. You've got GM, who generates significant free cash flow every year. Now, here's kind of this kind of speaks to the innovator's dilemma, which is that GM, for one, they got to pour money back into their own business, the core business. They also have to probably please shareholders to some degree and return some of that capital. And you've got executives that are probably paid in options in some way that don't want to risk just pouring that money into a cash burning machine for the foreseeable future. So it's it makes sense, I guess, that they're getting out of it, but it does kind of concern me a little bit that maybe we are significantly underestimating how expensive it is to build out some sort of a robotaxi fleet. Um,
I wouldn't. Another thing I wouldn't underestimate is how adverse some of these legacy companies can be to long-term projects.
oh
It's
yeah,
just the nature of being a mature business run by outsiders. You don't have the founders there anymore. Yeah, at one point back in the 1920s, General Motors was the innovator. They were the one that said, "We're pressing our advantage and we're investing for a multi-decade time horizon." They might not be in the same point today, and you might have a shareholder base that doesn't agree with this, as opposed to an Alphabet where Sergey and Larry, they control everything.
yeah, it is. So the innovator's dilemma is just so real. Like I was thinking about this with Amazon because we were doing that David Gardner episode. I was thinking about Amazon early on, being early to selling books online, e-commerce. There was, for one, you get a lot of buzz being kind of the first to the market, and you get a lot of attention for it. So they had a lot of eyeballs, and the other part is you have a ton of focus on that singular project. The then you have a competitor that comes out called CD Now, which is selling CDs online. You've got an advantage over them if you're Amazon. But I was thinking if I were in Barnes and Noble's shoes in 1997, 1996, and you saw Amazon doing really well, I thought, how come Barnes and Noble didn't just kill them?
Well, the
Well,
profit, I mean,
the
it
profit
didn't look
stream
profitable
disappears.
at the time. Yeah.
Right. If you push your recurring customers to an online destination instead, and it's more costly for distribution and all that, you're losing your own business. You've got all these incentives that are short term. You're not going to get paid. You treat it as like this side project as sort of a hedge, but you never really have the focus. It just makes so much sense that when the young company comes in with singular focus on one thing, it's easier to disrupt big companies than I think people anticipate, myself
Yeah, we
included.
have a yeah, and we have a comment here that says Cruise should spin out itself, or GM should spin out Cruise, raise a bunch of money, get that equity premium for an innovative business. But the thing is, they should have done this. And hindsight is 2020. They should have done this before everyone got extremely pessimistic that they were behind the ball, which they are. So I don't know what kind of multiple they would get when the fact that Waymo seems to be running away from them rapidly in deployment. Now, I guess we ended up really talking about Google again there. We had a comment here that wants to talk about the Gemini 2.0 updates from today. I guess that's another update from them. I don't have any specific thoughts, but I can maybe read some of the updates that they have. What's interesting, and this is Gemini 2.0. They got dozens of names. They probably need a naming czar of someone that just comes in and says, same as like with Xbox too, those ones. Hey, look, just you guys make all this research. You got the smartest people in the world. You're inventing quantum computing, but naming isn't your forte. How about you just pay me $1,000 a year? Call me and say, what should we name this? There's a
I don't
plenty of people out there that would be
it's
better than this.
it's
But
hilarious before you get into it, like, the quantum computing, you had this massive breakthrough, this awesome chip, and you named it Willow? Like, can't you name something a little more exciting?
just they name stuff too much and they change the names constantly. Like, people really need to learn from PlayStation. PlayStation 1, PlayStation 2, PlayStation 3. Just keep it simple and you know what ones are which. I mean, okay, look, at this update, this Gemini 2.0 update, there's a long blog post they put out. You can find on the Google website and their Google research blog, and you can read all that stuff. They got all these parameters, the large language model underlying everything. But what I thought was interesting is, and maybe we can talk about whether we think people want this, but they have this thing called Project Astra, and I don't think it's out there yet, but and I'm sure it's going to be applied to almost all their products, but it seems like they want this underlying large language model, Gemini 2.0, or just Gemini as it keeps progressing, and they want it to be multimodal and able to understand essentially every single input from the real world. So it can ingest any sort of data, and then it can come and spit stuff back out to you with dialogue, with video, with audio, with written context. And that seems to be their end goal and what they're really hyping up with the Gemini app and this new AI assistant. They also seem to be talking about adding it to smart glasses, but that we don't know exactly. Um, and maybe that is Astra as the smart glasses, but again, I get confused with all these names. It's really hard to uh, just I don't know keep them together. What do you think here, Ryan? Is that the right path for them, or is this still? Are we just gonna go through the 2016, 2017 Alexa cycle again, where we get all this new hyped up technology that seems interesting, but no one really wants to talk to phones. I'm curious. Well, answer that first, and then also, have you seen the Gemini commercials? Because I know you don't watch that much American football, but about every commercial break, they got this Gemini commercial. I'm curious if you've seen it.
I have seen the Gemini commercials, and
Atrocious,
yeah, they're
dystopian.
awful. They are very dystopian. It honestly, I'm getting, like, AI fatigue, and this is someone who's I'm honestly fairly interested in the space, especially after just our discussion with Sean Wang.
And you
But
work in an AI company.
yeah, and it's just like there, there's so many different like days, like Gemini Day, the Gemini 2.0 big release right after the Chat GPT OpenAI one. Now they're doing the 12 days of OpenAI. It's just uh, it feels to the anyone who's not a developer, it just kind of feels like fatiguing, I imagine. And I can't imagine there's a whole lot of people that watch these Gemini Day type of events that
They know
are
what's watching those.
average
There's
people.
not the average person isn't watching them. The way they see it is these commercials. And they go,
Yeah,
"Talk to Gemini." Like,
yeah. What a bad
what the
commercial.
hell is a Gemini?
On the flip side, you know what a commercial you mentioned a while back that I hadn't watched but is excellent is those new Starbucks commercials that just are just drips of
Simplifying.
coffee.
Yeah, it's just attractive people going to Starbucks. They look like they are having the time of their lives ordering some $5 coffee, and then there's some catchy jingle. You know,
Yeah,
Apple
I
needs to go back to that because that's what they used to do, and now they're having these commercials. Have you seen the Apple Intelligence ones? Because those are on football ones all the time. They're probably the only ones that potentially are worse than the Gemini. They just do these things where they call themselves geniuses, where it's essentially like this person screwed up in their life, whether they forgot someone's birthday or they forgot to do a work project, and they just go, "Hey, Apple Intelligence, do my whole work project for me," and they just load it up and click send. I'm like, yeah, that's exactly what we want to do is just outsource all of our work to Apple Intelligence. But besides the point, back to the
it's
topic.
yeah, I've had a lot of anecdotal evidence actually with Apple lately. Gone in store a couple times. Feels like they've
Well,
got way too many employees in those stores. Like the products should sell themselves.
I
Like
think that's the Apple the store stuff where you can like go in and talk to the experts, whatever they call them. Do they call them the geniuses?
yeah,
I think.
well, some of them. I don't think they're all qualified as like the like there's the geniuses which I think are like the tech, like customer support more, and then there's like the like sales side of thing. It was like the store was busy and it was like a one-to-one worker to customer ratio. It just seemed a little much, but hey, they're generating great margins.
That's what
So
you get when you sell overpriced. When that brand adds about 30% to the average selling price.
another news headline here. Did you see that Amazon is officially you can buy a Hyundai on
Hyundai.
Amazon now? Is it Hyundai?
Yeah. You're
All right.
seeing someone I've watched a lot of car commercials given my American football viewing habits, so trust me.
So you can
They tell
so
me how to say it.
yeah, it's okay, Hyundai. People, this is a quote here. People in 48 US cities can now browse, order, finance, and pick up Hyundai vehicles on Amazon's new car shopping site. It says, with Amazon Autos, we are bringing the simplicity and ease customers expect from Amazon to car shopping, one of their largest purchases, while offering dealers a new channel to connect with a broad audience. Two things here. First of all, if you're a Carvana shareholder, do you think this should concern you? Second of all, if you are a dealer or even just a straight up auto brand, call it GM or Ford or any of the others, does this channel entice you, or would you worry about selling on Amazon?
Yeah, that is interesting. I don't know about if I would be that concerned if I'm Carvana because Carvana seems to be way beyond just buying a car or browsing for one. They have I don't know, the vertical integration of the used car marketplace. They deliver it to your house. They have all this stuff. I mean, the concern there is probably the profitability, just given all the investments they've made and some of the other stuff there. But this seems potentially interesting. I guess there is I think everyone would agree there is room for disruption within the car buying um, process, where Tesla, they kind of disrupted that a bit, where they didn't go with the dealer model, they went vertically integrated. It seems like the dealers, and I'm saying the car dealers, where almost majority of the time in the United States, you have to go through a dealer to buy a car, and they're usually just almost like a franchise. They're not even owned by the car makers. I think there's room to disrupt that with the internet, and it's surprising that it's taken this long. Maybe they just have so much power, but if Amazon can do I don't know, it's just such an early thing. I'm just not sure whether I would buy a car on Amazon. I mean, maybe browsing, but I would really don't you have to test drive it?
Yeah, but you can
Am I
go,
crazy?
you can go to a dealership, you can test drive a car, and then you can go buy it online, especially if it's cheaper and you don't have to pay like, you know,
I guess
there's
that's
not
true.
embedded commissions, stuff like that. It,
Yeah, yeah, if you it's kind of yeah, well, that's what people used to do with other products, right? They look up on their phone, "Oh, what's the cost here? I can get
yeah,
the same one. Okay, it's cheaper. Alright."
yeah, and honestly, you could cut out if you're a auto brand here, you can cut out some costs potentially selling on Amazon, but it I imagine there's some benefits to kind of owning your distribution channels as well. So um, there's I don't know. I would be surprised if this was a huge winner for Amazon.
Yeah, I
It might
agree.
be nice for Hyundai, but I don't think it'll be a big winner. And
Yeah.
Carvana is more of a logistical issue. Like I don't think they're going to be able to compete with Carvana just because it's the used car market, and I think the difficulty there is the purchasing of the used cars and
The
then the
auctions and
distributing.
it's used cars versus new cars,
Yeah,
so
exactly. Okay.
entirely different. We
Um,
got some questions here. Actually, you mentioned Amazon. Did you watch the Bezos interview? Uh,
Parts of it. Man, I
parts
love
of
that
it?
guy. He's just
Yeah.
can I find another CEO like him today, please?
I like him more in about 20 years ago. Right now, he's doing, he I think he's lowering his voice, I gotta say. I've watched a lot of old Bezos stuff. I think he's doing an Elizabeth Holmes and lowering his voice, but who knows? Maybe
It's
I'm just making
possible.
that up. But what I thought was interesting and relates to a question we have here from Tyler in the comments. How do you think this is what he says? How do you think Musk will use his influence to affect his companies, Tesla, SpaceX, Twitter, and AI? Which, for reference, that's because Musk has a pretty big relationship with the incoming presidential administration. And they asked the same thing to Bezos, given that Bezos has a space startup and there's a lot of regulatory stuff around that, and it's a direct competitor to SpaceX. SpaceX is the larger competitor. And what I thought was really interesting is Bezos almost did the Buffett thing where they ask, like Buffett gets asked about a stock he owns, and he goes, "Oh, Occidental Petroleum would never do that. This is their plan." And it almost says it's like it's not activist investing, but it's saying, well, I'm telling the world, and when I say something, it becomes a whole news thing. So essentially, what you're doing is what I say you're going to do, but I'm not actually telling you. I think Bezos did almost the same thing in a way where he said, "Oh, well, I'm taking Musk at face value, and he said he's not going to use his influence to negatively impact any of his competitors. He's not going to use it for regulatory capture." And I believe him, and I don't think he's going to do that. So if Musk does that, you know what I mean? Like he's almost trying to set it up where he
Trying to be
wins either way.
proactive.
Where
Yeah.
yeah,
It- yeah. I think I don't know. I just think he's a really good communicator. And this is a good example of it where you kind of speak it into existence in a way. And if you're proactive here about like, oh, he wouldn't do that, maybe Musk feels a little less inclined to do it. The one takeaway I had that from that uh, interview was well, I guess there was a lot of value to take away, but I didn't realize he still cared so much about Amazon. Honestly, I didn't realize
that
he was
was
like
the big
still in
yeah.
meetings, stuff like that. Um, he kind of seemed from the outside looking in like he's just completely removed, not really a part of it anymore. But he says it's still a decent chunk of his focus, so it's kind of nice to know.
Yeah, and what he was saying is it's similar to what happened with Sergey Brin. I'm not sure if Larry Page is back at Alphabet, but Sergey Brin definitely is, and it was the AI stuff that brought them back. And it's kind of I feel like this would boost if you're Sam Altman, this really boosts your ego because you're like, "All right, well, I made all the founders come back to try to compete with me." But they must all see it and this AI stuff and we're seeing it, it's true. The spending there is crazy. They must see it as so important for the future of their businesses that they said, "I gotta come back and start monitoring this." But I on the one hand, I thought that was very interesting that he believes AI is so important. But on the other hand, I don't know if long term this is the best way to manage Amazon's culture
It
because
yeah,
you don't want the cult. You want to the
you don't want an
transition
Iger.
period. Yeah, exactly.
It seems like Jassy has more control of Disney than Bob Chapek did when Iger left. Like
That's
it's
true.
yeah, like he's been in the business for so long too. It's not like this is his first real step up into a leadership position. Like I don't know. It doesn't feel like he's still micromanaging. It's hard to tell from our position, but it doesn't feel like Bezos is micromanaging Jassy.
Yeah, I just the first thing I thought of when he's like, "I still am there, and I still have projects that I influence," and I'm like, "Well, that means Alexa spending is gonna keep is gonna stick around,"
And
which is
he said that too. Like I think at one point in the interview, he's like, I have I'm quite willing to change my mind on a lot of things, but there are some things I just simply won't change my mind on.
Alexa.
Alexa's
If
probably
you
one of
read
those things.
yep, if you read the Amazon business biographies, Alexa for some reason has a hold over Bezos when it seems like people don't. Whatever. We've gone over that time and time again.
But he also mentioned that fulfillment by Amazon was one of those things. Um, was one of those initiatives that a lot of people said, let's cut this out and it's going to be too costly. So for every
Yeah.
Alexa, you get a you get a fulfillment by Amazon. Maybe
Good.
probably a
Good.
few more losers than winners there, but
Yeah. All
nevertheless.
right. Other question. Thoughts on the potential TikTok ban or sale? Did you know that's supposed to come through? I think it goes through like January 18th or 2 days before the presidential switch. So that throws a wrench in the mix. It's still supposed to happen. And it's not, I guess, a ban. It's a sale if you don't sell it. So people call it a ban if they're on TikTok side, but they call it a forced sale if you're on the anti side. If it happens, here's the question here. Does China punish Tesla and Apple? And if sold, who is the best buyer? Well, it's not getting sold. For some reason, TikTok says we are incapable of selling it, which I think means that the government is telling them because they keep saying things like it's impossible for us to sell it. And I would just go, well, what do you mean? Like this has happened. Selling
It
companies has
feels
happened before. We got a historical president here. I think we can make it work. But I think they're just saying the CCP is not going to let them do it.
I was gonna say that feels almost like admitting guilt in a way here. It's like
Yeah, exactly.
we can't sell it. We can't sever it off from our China business. It's like why not? It's like
But I thought it was separate because that's what they're trying to pitch.
well, it's just logistically wouldn't work.
Yeah. Was
uh,
it
who
okay?
benefits?
Well, on the pushback stuff, would if the ban happens, are you more nervous about U.S. companies with exposure to China?
Maybe there's some sort of retaliation there, but uh,
I'm already nervous about it,
yeah,
so I don't think it would change.
I was gonna say I would if you have a company based in America doing a lot of business in China, there's already a lot of cause for concern. I'm scared to say it's already priced in, but I think for a lot of companies, that China risk, especially like Starbucks, for example, LVMH, that's not an American company, but you're seeing the repercussions of it already. It's probably not
I
priced
think,
in for
yeah,
Apple or
definitely
Tesla, but
priced in at Apple, 41 times earnings.
yeah,
I'd say
not
that's priced in.
how much. It's mostly the manufacturing side, right? It's not. They're not the leading. Like
Oh, I mean, Apple does tens of billions in revenue in China.
really, I didn't realize it. Yeah, 41 times earnings, maybe not priced in quite that much for Apple.
It's a bond. It's essentially a it's better than a bond. It's less risky than treasury bonds according to the market. All right, we're over halfway, Ryan. So I think we need to talk about more of our advertisers and before we move on to the next segment.
Yeah, let's talk about one of our new sponsors here for Chit Chat Stocks. It's Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight knit community of stock focused investors. Inside this community, you can share, break down your portfolio. You can participate in weekly calls, which Brett and I are both on, and compete in some fun portfolio performance monthly competitions as well. I honestly do love this idea and what they're trying to build here, and it's why we're promoting it on the show. Brett and I are a part of the community, and we get a lot of value out of it. And it's really just nice. I remember when I first got into investing, I was recommended to try to build some sort of a network or community of friends to bounce ideas off of. This is what Blue Chippers is trying to build. So if you're interested in joining, head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. There's literally no expense whatsoever other than a little bit of a time commitment from you. The link will also be in the description. Do we want to talk small cap of the week?
Yes, we can. Yes, we can. And as a note here, follow up on the China revenue. They call it Greater China revenue, which also I think is telling on yourself for who's in charge. No, sorry, that sounds too conspiratorial. For who has some influence over your business and what you name your business segments. They did $67 billion in revenue in Greater China for fiscal year 2024 and $73 billion in fiscal year 2023.
I I have to admit I don't read much of Apple's reports these days. What percentage of its business is that? They're at like 350 billion in
Oh,
revenue,
that
right? Somewhere
is
around there.
you're asking for a lot of math. What's overall revenue is like in the 300 billions, so it's not inconsequential, but it's not overly consequential is maybe a way to put it. Let me just pull up total. Let's just do US total revenue. Yeah, 390 billion. America's 167 billion, Europe 100 billion, Japan 25 billion, rest of the world 30 billion. So China's pretty big.
Where'd you find those
Also,
numbers, by the way?
well, I did pull up. Well, it was on the IR page, but you can pull up all this data on our friends at finchat.io. Use our link, get a nice discount. Um, yeah.
Okay, let's talk small cap of the week here. Yeah, that was our attempt at plugging FinChat. So, small cap of the week presented by Yellow Brick Investing. The company this week is called Parker Vision. Now, going to shamelessly plug two of our sources here who happen to be two of our sponsors. But if you look up hedge fund letters online, FinChat will be the first link, and it's just a compilation of fund letters. In one of those, I saw a mention of Parker Vision, typed in the ticker to Yellow Brick, and found a really good write up on it. This is not the typical small cap that we do where there's maybe some chance of it being like a great compounder. Maybe there is, but this is more sort of an event driven small cap. So this quote is from One Main Capital's fund letter. It says the fund initiated an opportunistic investment in Parker Vision after the company received a highly favorable ruling from the Federal Circuit Court of Appeals in its long-standing litigation against Qualcomm. So, to kind of give some context here on the long-standing background between Qualcomm and Parker Vision. Parker founded a long time ago. They pioneered this direct conversion radio frequency transceivers, which led to combining of transmitters and receivers into a single chip. Apparently, it was pretty revolutionary at the time. Um, Long story short, these inventions allowed smartphones that operate without these inventions, smartphones that operate on multiple bands of RF frequencies would have been much larger and more expensive. So, big application here, um, big commercial applications as well, and potential for revenue. And to protect its inventions, this is a quote from another fund letter that I found on Yellow Brick. It says Parker engaged one of the top global intelligent intellectual property protection firms to build a patent portfolio that resulted in more than 200 patents around this technology with the goal of licensing it to its wireless chip makers. They apparently demoed this product for Qualcomm. They even sent prototypes of this tech to Qualcomm. And in 2006, Qualcomm started using the same tech, apparently, in its own designs,
So
its own
kind of a
applications.
copycat, bringing Yelp into Google and talking about an acquisition, spilling the secret sauce and going, actually, we're not going to buy it, but watch out a year from now. We're going to copy everything you do.
Yeah, basically, I think. It little more than a year, but yes, this has been going on for almost 20 years now, this debate. So apparently, now there are some emails that Qualcomm employees sent that are pretty damning, including one that characterizes Parker's technology as a holy grail invention, and another that says it's going to be very difficult for anybody to use this technique without stepping on one or more of Parker Vision's claims.
Ooh, that's good. That's
That is
nice.
damning, right?
That is nice.
Now, here's where it
What's the
gets a little
ticker
more
here?
interesting.
PRKR?
PRKR.
PRKR.
Parker Vision today has a market cap of $96 million. Earlier this year, it had a market cap of like $15 million. So it's up like 400% plus year to date because there's been these kind of favorable rulings. The case, according to this fund letter, is estimated to be worth $2.6 billion, $1.3 billion in expected settlement revenue or just settlement cash. Then there's like another 1.3 billion in interest that Parker Vision has been accumulating over 20 years of litigation. So you've got a $96 million market cap and the potential for $2.6 billion in a payout. Essentially, and the final ruling is expected in the first half of 2025. So in the next 6 months, roughly. There is a chance of a 20x here if they win, and it seems like it might be heading that direction. I have
If you
tried to
lose, you
veer,
go to 0, but
yeah, I have tried to veer away from investments like this because I've been hurt in the past, and it's just not really how I want to invest anymore. I want to find those potential multi baggers that can, you don't have to monitor quite as much. But this just kind of draws me back in.
No,
So any interest
I
here?
wouldn't. Yeah, I guess I wouldn't totally get rid of it from your investing style. Like, I we I would rather just own a bunch of high quality stocks at reasonable prices and let them compound. But when an opportunity like this presents itself, I don't think shying away immediately is probably not the best thing to do. This does seem interesting given the fact that there are those kind of patent companies out there and stuff like that that seem to just kind of delay and delay and delay, and they don't actually have anything materialized. They just talk up a big story. But if they have an expected date here, and who knows with rulings and trials and anything judicial, it can get pushed back a bit. So you never know. It might take a little while longer than the first half of 2025. But if something happens, hey, yeah, it seems like there's that binary outcome. And it's one of those where would you make this a 5% position in your portfolio? No, but maybe less than 1%, something like that. Seems interesting.
Yeah, I agree.
Not a recommendation whatsoever, but does seem like an interesting one for people that want to dabble in the micro cap space. Uh,
And
Stock's quite volatile. Just fair
yeah,
warning to everyone.
yeah. I mean, $96 million market cap. It's certainly a small cap. I think that might be deemed a micro cap as well. I think micro cap is anything under 150 by most people's
Yeah, maybe
standards.
250, 250,
50.
something like that.
But yeah, big thanks to Yellow Brick Investing. It's joinyellowbrick.com/chitchat. That is where I find a lot of these high quality write ups. And it's really fun to just browse. If you're looking for new ideas, just browse that website. It's free to join, but if you want to upgrade to a paid plan, that link will get you a discount as well.
Any other sponsors? As we hit the 15-minute mark here, Ryan.
Yeah, we should call out our first sponsor as well. Public, again, heads up, folks. Interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield is not locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks.
We got questions in the chat here.
I
You
have a
want to
question
talk
for you.
those?
I was
What?
thinking about this. I have a question for you before we
Okay.
talk some of these questions. We've done a number of I investor research episodes now. I think probably 8, maybe a little less. Bill Ackman, Pat Dorsey, Stan Druckenmiller, Norbert Liu, David
David Gardner,
Gardner. How many others? There's been some others, right? Um,
Peter Lynch.
Peter Lynch. Which of the ones we've done do you most want to have you been most inspired by to adopt some of their approach?
Well, Gardner, but that's something that I was inspired to adopt before his approach, and that's essentially the letting your portfolio determine your winners for you and having a discipline. And some people call it, we talk about this in the episodes, we don't need to go into it too much here, but having the discipline, the counterintuitive discipline to hold a stock while it's overvalued for a multi-year period.
I agree. Yeah, it's something that I've personally lacked. So I think
Yeah.
David Gardner is probably, it might be a little recency bias there because we did the
And it might be the
episode
bubble talking to us.
that too.
Yeah.
But certainly um, that one have kind of inspired me a bit to maybe adopt some new approaches. Okay, let's take some of these questions, and then I want to get your thoughts on the Kroger and Albertson deal. Um,
Well, yeah, our home state broke it up, I think, or sort of. That's where the competitive overlap was.
yeah, I think there was, I think it,
We're gonna buy up all the worst grocery stores in the state of Washington.
yeah. Uh, but do you want to take some of these questions first?
Sure, this one seems interesting. Maybe a snap judgment here. What company in your portfolios do you think will do the worst over the next 12 months? Pretty
Wow,
hard to predict, but
that's a
what comes to
question
mind
I
first, Ryan?
hate to answer. Oh gosh. Well,
I
let me go to my portfolio real quick.
I could
Um,
see Philip Morris taking a dive if there's these more narratives around, the Ozempic weight loss drug type stuff hurting smoking rates. Like, that's obviously good for society, but there's a lot of headlines around that right now. I could see that happening. The multiples gotten extended a little bit, so definitely could see that.
oh, I lost you there for a second. But you said Philip Morris was kind of yours.
Yeah, snap judgment.
Yeah,
Yeah,
I'm looking through mine now. I can see Philip Morris being one, which is concerning because it's a good chunk of my portfolio. But the one that comes to mind for me is probably Dreamfinders Homes. That one,
mm,
I've kind of
yeah,
been. I made a deal with myself to you have to hold companies for 3 years, so I'm going to stick to it. But I've been getting a couple red flags out of that business lately, which make me
but
think,
it's only year 1 in the year 1 of the investment, right? So 2 more years.
yeah. But you know what? There has been uh, true, real growth in that business since it's been founded. So
True.
there is maybe some proof of the business model there, but yeah, the red flags are kind of glaring me in the face. Doesn't matter. I have to hold it. I'm committing to that. Probably not going to add to it, but
Yeah, it's true. You don't have to add, and for individuals, you got money always coming into the account, hopefully, if you have a job. So you can diversify away from anything like that over time. Something we talked about on that David Gardner episode, which came out this morning. Another question. Uber reaching an attractive valuation. Does the FUD compound and reach 2022 meta levels, a 10x multiple in a few months? I think that could be interesting for Uber.
what's Super at right now? Let
Yeah,
me do
pull up
some
some figures
digging,
for us. Yeah.
aka just looking at it on FinChat.
I think the stock's gone into like a 25% drawdown. Not too aggressive, but I think what the questioner here is saying is, will it get worse? Maybe. I mean, if Waymo starts growing really fast, it could. But isn't that a risk that I think Waymo's a bigger risk to Uber than TikTok was to Meta. I'm gonna be honest, I'm very optimistic about Waymo because the product experience, the customer reviews say it is just way better than Uber, than a traditional car. So you just can't take that. I don't know. Like, it's not
Yeah,
something that, Meta just copied TikTok's product format.
and you got a
Can
company
Uber do
who's
that? No, they're outsourcing all this. They're forced to partner with them.
yeah, and you got a company who's willing to burn the money the same way you were early on. If you're Uber, right? You had so much venture capital backing that you were willing to take the losses early on. Waymo is also willing to do that, and it seems like a superior experience. That would be one of the most interesting. That would be one of the most shortest lived disruptors I think,
That is
where
true.
Uber
Yeah.
goes in, disrupts the entire taxi industry, and then potentially disrupted like 10 years later by Waymo. So I'm looking at the multiple here. It's down 29% drawdown. Forward EV to EBIT, which I, I think is a reasonable metric for them.
Yeah,
I
yeah,
don't want to do free
definitely.
cash flow because they are big stock-based compensation issuers, so that doesn't get included there. Forward EV to EBIT is about 26 times. Not bad, but
When does this what price does this get attractive for you?
I could see the Waymo concerns being a bit overblown because there is the potential that there's certain cities where Waymo just can't succeed like Uber can. Like
And don't
maybe
even speak internationally.
yeah.
Latin America, Europe. Yeah.
Um, the metrics for Uber, the growth looks great. The I don't want to just do relative valuation here because I see 26 times EBIT and I think, oh, it's not it's cheap, but I'm thinking of that
No, don't
relative
yeah.
to S&P 500, which is at like kind of record highs, and um, some of the other big tech companies that are also trading at high multiples. So I would say below 20 times forward EV to EBIT, I would get interested here.
The number that popped in my head was 15, but maybe I'm just pessimistic on the
Well, the
Waymo
forward
risk, and
returns
I
will be
would
better there.
yeah, that's true.
They're always
But
better.
yeah, I I think, like, look, is Uber dead? No, like, people that would just price it like Waymo's guaranteed to succeed and dominate the space, like, that's absurd, and obviously they're not doing that right now. But I want proper just accounting for that risk, and I'm not sure we're there yet, but we're getting there. Stock's in the 25% drawdown while the business keeps doing phenomenally. I'd like to see what their capital return strategy is, because if we're going to get into that mode where the narrative just gets worse and worse and worse, I would hope that the buyback can start accelerating. But yeah, 15 times, I'd be interested. But for a company that has disruption risk, 26 times earnings, it's not going to do it for me. I'd rather sit in treasuries and wait to see if that disruption happens.
Yeah, that's fair. All right, another topic here. Kroger and Albertson deal was officially blocked. Well, blocked. It was blocked by two U.S. courts, but Washington being one of them. The real issue here is that Albertsons terminated the merger. So Kroger could have appealed the decision, but Albertsons basically just said, no, we're terminating the merger. And now Albertsons is now suing Kroger for billions of dollars, stating that Kroger refused to offer an adequate divestiture package and repeatedly ignored regulators' concerns. Moves that Albertson claims caused the merger deal to be blocked. First of all, adequate divestiture package.
That's
Isn't
what
that
you do up
something?
front. Talk about
Yeah,
that
isn't
up
that something
front.
you probably
Yeah.
should have figured out earlier on? It's
Yeah.
easy to ask for more now. What
Who
do you think?
cares about
What do
these
you?
companies? Honestly, who cares? That's
Yeah,
all I'm gonna say.
my thought here is like grocery is not so capital intensive that if you are one of the major, I guess, grocery stores in the area and you start price gouging everyone, it's not the barriers
There
to
are
entry are
options.
not so
Yeah.
high that someone couldn't pop one up next to you and be a discount reach or a discount grocer. So I kind of think like maybe this didn't need to be blocked, but um, I'm a fan of courts stepping in when it seems like there is not the possibility that competition could arise. I don't think that's the case for grocery, which is like what probably one of the most hyper competitive industries in America.
Yeah, and in the state we live in, we can you can have an example of the Kroger-owned stores and Albertsons. Yeah, combining those, that's a pretty decent chunk of the market, but there's plenty of others out there, and seems to me like those other options, at least in the area we live in, do better. The Whole Foods types,
Trader Joe's.
Sprouts Farmers Market, Trader Joe's, the Whole Foods competitors. Yeah, I don't really get this, but Albertsons and Kroger's of the world have underinvested so much. It's like their stores are, it's like going back to 2005. And eventually that catches up with them.
Yeah, I, I will say the checkout process has improved. If we compare it to 10 years ago, but
Low
uh,
bar.
yeah, that is a low bar. Look, I mean, what are you expecting here?
I'm just saying, unless these are trading at just stupid cheap multiples, there's no way I'm interested in these.
Yeah, I guess. I mean, there's certainly quite close to saturation already. Maybe it's got to be like a big dividend yield for me. Like
Yeah.
they have to have be committed to paying the dividend, and it has to be, yeah, like you said, a really really cheap multiple because you're not buying these for growth.
No, I mean, yeah, I guess you're buying it. Maybe inflation. You're gonna get inflation, you know. But yeah. All right. Questions as we wrap up here. What are your thoughts on the administration's threatened tariffs? Well, incoming administration for the United States. Do you think there is any risk to your holdings? Well, so far, you would say my Mexican companies would be at risk, but they seem to have gone up. And the way I look at it is I'm hoping to own these companies through multiple presidential administrations in the United States. And I don't think the relationship between Mexico and the United States economies are going to get worse over a multi-decade period. So it's only going to increase. The incentives are there, especially if China is the boogeyman. Where are you going to replace a lot of that manufacturing? Latin America, specifically Mexico. We're seeing all that stuff go down there. And is tourism going to decrease in Mexico from the United States? No. And as the individual Mexican gets more, wealthier, as their GDP per capita and income per capita break through thresholds of $10,000 a year, $15,000 a year, $20,000 a year, you have much more room for consumer discretionary spending. And in relation to the airports, fast food, restaurants, stuff like that, just tourism in general, travel, I think it's going to help, you know, the Mexican airports, uh, especially both those. Well, I mean, you should look at all of the routes that are going into Monterey. I saw something like a direct route between Tokyo and Monterey, I think. Like, why are you doing that? Electronics manufacturing.
It's I guess, yeah, I'm not too worried about some of the tariff threats. It's also probably important to contextualize this, and you go back to 2016 when um, during Trump's first presidency, there was so much concern about the relationships with Mexico, and if
A
anything,
lot of threats. A lot
yeah,
of threats.
a lot of threats. A lot of it was just kind of a negotiating tactic, and ultimately, the relationship between U.S. and the trade relationship between the U.S. and Mexico got better over time, if anything. So, um,
Yeah, it just goes
I
up and to the
suspect that
right.
will continue. The there, if you have a company that does a lot of manufacturing in China, the tariff threats might be an issue, if something were to get worse there. I know, like Yeti, for example, who I
Yeah.
think they do a lot of manufacturing in Asia. I mean, it must be in China, given that the stock sold off so much when Trump was elected. I'd be more concerned about companies with outsourced manufacturing that direction than any trade relations between Canada and Mexico and the U.S.
I agree with that. The one thing I will be watching is any sort of news on Mexico and the United States creating buying opportunities where we could see stocks hit a drawdown, we could see the peso depreciate, which we actually did see, and that could create, some opportunities. And I think prepare the watch list now. You never know what's going to happen, but there could be some opportunities out there. All right, we got to wrap things up. We had one final one from someone that joins a lot that asked about the Donkey Kong Country getting open at Universal Japan. Did see that. Seems like Nintendo keeps doing stuff there. And they asked, do you think Nintendo will utilize more IPs within the parks? Yeah, I think for sure. Now, the question is, as we've talked about, the Nintendo theme parks are not going to be very material to their own financials, but it's all about regaining, not regaining, keeping your customers happy, keeping the kids, the players, the families attached to your franchise and entertainment characters. So the key is, from a financial standpoint, when the new Switch comes out in 2025, which the company has essentially confirmed now, which is good because it's not just theoretical anymore. They have said they are bringing it out within a year. Well, that's going to be, if that's successful, then the earnings stay higher. But the theme parks, that's kind of a sideshow and more of a long term customer retention thing. It's not going to impact the financials. All right. We're going long. Ryan, anything else before we get out of here?
No, a little bit of a tease. We do have a exciting episode coming out, which will, I think a lot of people will like. We've talked a lot about the excess in the markets and the valuations of certain stocks getting to levels that we don't like. We're going to find some stocks for you that we do like. So we will touch on those in an upcoming episode.
Yeah, stocks in a bear market, little AI interview, lots of fun stuff. If you want to talk about this episode, talk about any sort of investing topics, join our chat community on Substack and subscribe to our free newsletter. Give us a review on Spotify or Apple Podcast. It takes 5 seconds, and that is the best way to support the show. As a disclosure, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan and I or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in on the live show or listening on YouTube, Spotify, or Apple Podcasts. And we'll see you next time. Okay. Seems like internet was good except that one spot, right?